the Santa Clara University School Business team, and we would like to issue a buy rating at the target price of $51.25, the price at the end of January for Autodesk. Now, the reason for this buy rating is because Autodesk has pretty sound financials, real strong balance sheet, real strong cash, really sustainable competitive position, very strong in the market, and they've been able to mitigate any risks that they do have right now.
So just to give you a brief overview of the company, Autodesk provides computer-aided design or CAD software. It was founded in '82 by John Walker and is currently headquartered at San Rafael, California. Now, the company divides itself into 4 self-defined business segments, and in terms of revenue, the largest is the platform solutions and emerging business, followed by the architecture, engineering, and construction, which is followed by manufacturing, and finally our media and entertainment. Now, we believe Autodesk's competitive strength is in 2 areas. The first is innovation, or their capability to come up with new CAD tools and enhancements. This helps them to retain their customers and to penetrate markets that traditionally had not been using CAD. Their second competency is their strong network, which is defined by the breadth and depth of their product portfolio. And as you can see on the screen, it's also defined by their large global network of third-party distributors, resellers, and so on. And in particular, we'd like to highlight their recent heavy investments in the educational sector, which Autodesk terms as the STEM initiative, or the Science, Technology, Engineering, and Math initiative. So moving on to the business strategy, we like to say Autodesk strategy is to get the market, where growth refers to growing their current market share, and they plan to do so by providing software suites as opposed to standalone products. Then you have expansion, which is expanding their total accessible market. And they plan to do so by targeting emerging economies on the back of their strong network of distributors and educational institutions. Finally, you have transition, and this encompasses a lot of changes, but primarily it refers to shifting to a SaaS model from a desktop or a LAN model. Taking a look at the industry that Autodesk competes in, we found some overarching characteristics which define the market, such as the high barrier to entry. And the industry competitors are able to keep this barrier to entry very high through increased R&D and feature application. Then we would also like to point out that the cloud-based CAD software is in its infancy. And so this market for CAD will expand in the near future. And as always, piracy has been an issue for the software industry, and CAD is no exception. And the overall industry is broken into many functional segments, and in total they represent a market size of $21 billion.
So looking at Autodesk's position in this market, you can see that Autodesk actually has a pretty enviable position. They have the lion's share of the market with about 85% of CAD use, which represents more than 8 million AutoCAD users. The only threats that they do see are a significant number of substitutes that exist across all the competitors. These, specifically in different verticals and segments, is where these competitors actually pose a threat. Now, realizing the competitive nature of its market, software in general and CAD in general, we wanted to ensure using the appropriate financial comps for different peers. And as you can see, Autodesk has been able to maintain pretty high EBITDA margins over time, and their price to earnings ratio has been pretty great. So you've heard that Autodesk is a buy from a business perspective, and we reiterate that it's a buy from a financial perspective as well. Now, we've analyzed the Autodesk financial statements for the last 3 years and forecasted out the next 5. We believe that they will realize about a 10% CAGR over the next 5 years. And with the introduction of their SaaS model, they expect that recurring revenues and visibility will increase over time as well. So because of that, we reiterate that $59 price target and a 15% upside from the current prices. So the company expects to focus primarily on construction and AEC and manufacturing sectors. As you can see, those are some of the key drivers for sales growth in the next coming years.
Okay, now since this is actually an equity research report that we did, we believe that ROE is a key measure. Now, the ROE is pretty constant, but it's a good growth. one of the key factors in this is the financial leverage, and this is very this is in line with the fact that the company has only recently started making use of debt. Their profitability is relatively constant, while their operating efficiency is on a slight decline, but this is not very significant. Now, when we look at the company's cash flows, we find that they have a very healthy cash flow from operations, but they have a negative cash flow from investments, primarily because of their acquisitions. Their cash flows from financing keeps fluctuating, mainly because of their stock repurchase as well as the issue of debt. Now, when we did the valuation, we considered two models, one the multiplier model and the second the DCF model. For the multiplier model, we considered the price to earnings ratio as well as the EV to EBITDA ratios. And we've considered Autodesk's 5 major competitors that we've mentioned earlier. We've considered their 2-year forward median. We've observed a premium of about 45% for PE and 29% for EV EBITDA on Autodesk's market price relative to its peer group during the 5 years. According to the multiplier analysis, we've come up with a target price of $56. Now, when we did the DCF model, we've considered the free cash flow from to the firm as a suitable valuation model. We found that the sales would increase in the next 5 years by a percent of 6.6%. This is mainly because of their investment in construction and manufacturing. Now for WACC, we've sourced the beta, and then we've unlevered and relevered it based on the cost of debt and the debt equity ratio. And according to the DCF model, we've come up with a target price of 61.
Thank you, Subs. Combining the two models, we gave more weight to the DCF model and came up with a final target price of $59 as of fiscal year end 2014. We used a Monte Carlo simulation to combine various combinations of growth rates and construction and manufacturing sectors, as well as the terminal growth rate. The simulation results suggest that Autodesk makes a good purchase about 74% of the time. Now let's take a closer look at some of the factors that add to Autodesk risks the other 26% of the time. Investors should be aware of certain risks that cast shadows on Autodesk prospects. Economically, Autodesk earns 71% of revenues internationally and is therefore exposed to global financial disruptions and exchange rate fluctuations. Derivative instruments can hedge against FX rate changes, but Autodesk and its customers are always exposed to global downturns. Their software is heavily pirated in emerging markets, and laxer copyright policing could further reduce sales. Although their acquisitions give them a competitive advantage, it also exposes them to potential litigation on behalf of those acquisitions. Their internal growth is driven by innovation, which is in no way guaranteed. Although they may have an impressive record, they could misstep and lose market share. Their new SaaS model offers growth in a promising new market, but has large potentials for errors and customer dissatisfaction. They already rely on potentially risky third parties for internal services, but a SaaS model will need further support for hosting customer data and projects. They will have to worry about litigation and customer dissatisfaction if their services are disrupted due to a third-party failure or a cyber attack. SaaS might help secure recurring revenue, but it may also threaten Autodesk's existing desktop solutions and associated maintenance revenues. Finally, Autodesk's largest threat continues to be competition. Any strategic or target mistakes will threaten growth and expansion. However, despite considering the potential impact of these risks, we are confident in recommending a strong buy on Autodesk with a target price of $59.
Just to reiterate, Autodesk has a really good position in the market. They have 85% of the CAD market and are among the market leaders in the construction, manufacturing, and media and entertainment segments. And they also have they've been able to maintain significantly high barriers of entry, which are bound to get higher with their emerging SaaS model.
And the company has a sound financial position with steady ROEs, which are better than their competition.
There's a positive outlook in the industry as a whole.
Autodesk is a solid company that has managed the risks well. Investors concerned about Autodesk's growth should keep a close eye on their move to SaaS and how their competitors will react. We're the Santa Clara team, and we'd like to thank you for your time. Any questions?